And good afternoon. Welcome into Market Talk for Monday, February 8th, 2021. A good afternoon to you. I'm your host, Jesse Allen. Great to have you here with us as always. As we start a new week, got a big week ahead of us here in the market trade. And I appreciate you being on with us here for the program today. MarketTalkAg.com. That's where you can find us, our home on the web. And it's the same on social media at Market Talk Ag. I mentioned a busy week ahead here in our markets. Let's bring in our good friend Bryan Doherty with Total Farm Marketing by Stewart-Peterson. Bryan, good to have you back on here on this Monday after I know you were traveling last week, but good to have you back here with a
Thank you,
important
sir.
USDA report ahead.
Yeah, big day tomorrow. Another USDA report. The last several months, as I think probably all your listeners, watchers know that way we've seen this continued, let's say, declining carryout numbers. So that, remember, the carryout number is the final pile. I call it the pile of grain left over after all of the line items on the USDA report. So it's not so much we say, well, it's going to be a yield issue or it's going to be this. It's what boils down in the end. And so over the last year, it's really been a combination of yield and demand. So declining production, increasing demand.
Yeah.
And tomorrow we'll have new numbers again.
Yeah, we'll have new numbers, and I know the trade today here on Monday really reacted bullishly ahead of this report. We saw good moves higher, corn, beans, and wheat, and I want to start with today's trade. Was a lot of this maybe some positioning ahead of that report? I know we have some weather concerns out there with the cold weather snap in the U.S. and Russia. Argentina's turning drier. I know weather had a big factor today, but was some of this maybe just some positioning ahead of tomorrow's report, Bryan?
Yeah, it probably was, Jesse. And in particular, old crop corn busted in a new high, so there's likely some buy stops being uncovered there. So we'll call that short covering. We'll call it short covering for people who just recently went short, who probably thought, hey, it looks like this thing could tip over. What's the chance of another friendly report? All of a sudden, it kind of gears back up. And the other thing I think you're seeing when prices set back a couple of weeks ago, and now we clawed back in the new highs, is on that setback. We were experiencing, at least with people we talked to, that farmer selling was slowing down quite a bit. So the farmer's looking at this going, well, geez, we see kind of a very friendly outlook, or potentially friendly outlook, some weather in South America. Cash flow isn't quite as urgent or as necessary in likely some other years. We're not selling. We'll just hold back. And so I think these rallies will be sold, but it doesn't look like farmers are pushing inventory out in droves. They're generally favorable. They like the bigger numbers.
Yeah, they do like the bigger numbers, and I think it's very positive to see some of these moves here today ahead of this report. And, pre-report expectations from a lot of firms we have seen, we're starting to drop that soybean number specifically down towards pipeline levels, and corn's going to be, getting dropped, it looks like, here as well. And I feel like that's going to give us an opportunity to push this market even higher if the market hasn't already priced a bulk of this in, Bryan.
Yeah, there's been, Jesse, a lot of talk, and I've been in that group. Has the bean market really rationed the inventory? And yeah, tomorrow's report, the pre-report estimate for the soybean carryout, as an example, is about 12% less than the previous month. So it's not even so much bushels, it's percentage changes. Corn, it's about 10%, but it is bushels. There's not a lot of bushels to give back to the bean market anymore out of carryout. So you don't have this like extra supply out there. And you talked about pipeline or number of days. I think it was 10 days, 12 days we got. That's not a lot of days from September 1. So you better have some beans ready to rock and roll at harvest. And so it's going to take a real incentive to get enough producers to put enough in the U.S. pipeline, that is in the crop, in the ground, to get into the harvest pipeline for harvest delivery. So I think the way those things happen is through incentives, and the incentive is higher price. I don't think we've rationed the supply enough. So that being said, we know we got a pretty decent, maybe a really big crop out of Brazil, but it's not here yet, and there's been some rain delays. So it is what it is, a very friendly looking corn market today, old crop in particular, and a good looking bean market. It's been kind of hanging around, seems like waiting in the wings to break back above $14.
Well, and you mentioned Brazil, and I know their ag minister confirmed late last week they're anticipating a bumper crop of soybeans and corn. But again, we're seeing some of those delays down there as well with weather challenges. So that'll be interesting to see where the Brazilian crop goes. And another thing, too, I want to ask you about, our export pace. We're well ahead of what we need to be for soybeans, but we're behind on corn. We saw all those Chinese purchases come in for corn, but we haven't really started shipping much of it out yet. How much is the export pace factoring into things right now?
Yeah, and actually, the percentage of where we are relative to what's needed, I think we're actually ahead of schedule, Jesse, on sales. But you're talking about the loadings or the shipments. Yeah, that's got that big question mark behind it. Well, there's only so many ships, and so many ships can only hold so many soybeans and other products. So I think that's more of a logistical issue that straightens itself out as shipping finishes with bean movement into the winter months as the focus turns to South America. But corn shipments out of the U.S. then are strong. Remember those sales for the 2021 marketing year. That means those bushels are delivered off of last year's crop by the end of summer. Well, summer seems a long ways away, but it's already, the second week of February. So those ships will be loaded here into the spring and early summer and likely gone before the Brazilian crop, the second crop, becomes available.
It'll be something to watch for sure. If I'm a producer looking at today's closes, heading into tomorrow's report, maybe, we talked about farmer selling has slowed, but maybe I'm looking at this going, okay, maybe I should maybe make a few more sales here today, or at least get a floor underneath me. Any advice you would give to producers who are looking maybe at corn right now? We'll start there.
Yeah, for sure. We're in this market environment, Jesse, that from a historical perspective, we just don't have markets like this too often. And so when we do, you've got to look at it and it's great to hear somebody like me saying, well, we haven't rationed supply, we need to go up. The inclination would be, well, do nothing, right? If he thinks it's going up. Well, that's an opinion. The reality is you've got really good prices, best prices in 7 years staring you in the face. You ought to be keeping your pay raise and continue to trickle some of these old crop and even some new crop sales out. But the question is, if you don't want to sell, what do you do? How do you hold on to your inventory? Well, if you want to defend it, then you look at the put option market. So my suggestion, or my implorement, if that's a word, I'm imploring farmers, talk to your advisor, talk to somebody who can really help you kind of balance this out and manage your objectives. I look at something like, I've always said this, and I believe this: soybeans are always $1 from anywhere. Wheat's 50 cents and corn a quarter. And maybe you can throw 50 cents onto the corn right now. You can move that much without rhyme or reason. So think about the last dump off in beans. It was like $1.30 just in 5 days. So anyway, the point of it is, concentrate on the strategy. In this environment, both the bulls and bears can have really good arguments, and probably both will be right at some point. It's just the timing of it. So be smart about it.
Yeah, and you would say that for corn, soybeans, wheat, whatever the case is. I know we don't have a lot of soybeans left. We're probably talking more new crop there, Brian, but you'd probably say that for all three commodities.
I would, right across the board. You just got to look at the whole gambit and say, hey, these are prices that are workable. They make sense. Other variables that are coming into play. We're looking at new crop, and okay, well, look at today's date. It's what, the 8th of February, right? Well, we're almost a fourth of the way into the insurance level that we're setting for crops. So things like that might have some thought process. I was just talking to a large corn producer, and he said, we're getting to a point, if we can hold this price up, it's kind of a no-brainer to plant, in his mind, to plant corn. I like beans, but I'd rather plant corn. I got a better, I got an insurance level I can live with. So just things to think about. It could mean a lot of supply by fall.
There are a lot of things to think about, and it's interesting, you bring up that point. I mean, we're talking about an acreage battle is probably going to be the next milestone in the road here, possibly, as we start to determine what we're going to be planting in the U.S. for this spring and into the growing season. Corn, soybeans, wheat, cotton, sorghum, milo. I mean, all of these crops are battling each other, and it's really going to be interesting to see what farmers decide to do here over the next couple of months.
Farmers have a lot of interesting choices, and farmers are the smartest people you'll ever meet. I mean, they're thinking this through. The wheels are turning, but there isn't, I mean, on the one hand, there's no easy answer. On the other hand, there might be very easy answers. It's just their choice of what they want to do. But you mentioned some market like cotton again, not another market hitting new highs, contract highs over the last several weeks, and just this nice uptrend there. So a lot of good potential. We don't see today. We just don't see a big turnaround and a dump out. But, keep in mind, bull markets always have good reason why they're where they're at. And they've always got another reason to go higher. So that's why the strategy is so important.
Let's talk livestock here, Brian. This cattle market, the cash side of things, was very strong last week, and we held some decent strength here today. Although feeder cattle turned lower here, pressure from that rallying corn market, no
Yep.
surprise there. But for the most part, it's looking like cash trade setting up for another nice week and maybe trying to push this cash trade a little bit higher. What are you seeing in cattle here as we start a new week and head into tomorrow's reports?
I think you're seeing a few things. You're seeing actual winter weather from like mid-January to now. Kind of, it's cold. I mean, it is
Mhm.
cold out, so you're probably gonna have limited weight gain this whole week, and carryover from last week's cold. Plus, you've got a lot of the Midwest that had some snow. So weather, the November, December, half of January, as you talk to cattle guys, are like, it doesn't get any better than this. All of a sudden, it's getting crappy, and calving season's just around the corner, and um, so that's one thing. Two, we talked about maybe, what are the demand drivers? Generally, I'm this is my opinion now, but I'm sensing the news out of COVID is kind of, getting some traction. The number of cases are starting to slide, and vaccinations are going up. There's just confidence things are going to start kind of moving toward the direction of opening up. Super Bowl had a lot of cutouts in the stands, but it had a lot of people too. So we're returning slowly back to normal, and I think your restaurant industry is getting kind of geared up. So I'm generally supportive on weather. I'm generally supportive on the technicals. That being said, you're pushing some envelopes that you want to probably get some puts bought or buy puts, sell calls, because we probably have another, $6, $8, $10, and that might be about it.
Well, and I look at this market as well, and those factors you mentioned, I would agree. I think we're starting to see some of that demand maybe ramp back up. And looking at feedlot country, I mean, trade volume, we're probably going to wait till the back half of the week here. But again, things are looking very strong. Show lists are mixed for the most part. The beef cutout continues to be strong. And really, overall, this cattle market, I'm with you. I think producers, they're sitting here going, we've been range bound for so long. Now we're slowly starting to put a few dollars onto these prices, and I think they couldn't be happier right now.
Yeah, you got a lot of things clicking in the commodity complex, and not all markets, but enough of them that it really looks supportive. The other market we haven't touched on is just you kind of look at the energy market and crude oil. That has been on the run lately, and just from a commodity perspective, often a leader. When crude moves one direction, it's not long before it seems a lot of other commodities follow. For whatever reasons that may be, there's some legitimate thoughts that that's where the money flows. So you've got that out there as well.
Mhm.
But really, just the big story. Again, I just keep going back to a lot of these commodities are. We even take a look at hogs or cattle. We had this whole COVID situation last May and June and July, and we don't really know the extent of how many heifers went into the pipeline when they could. What's a producer supposed to do? He sees a bleak. How many hogs were euthanized, or
Mhm.
so? I think that's feeding all into part of this whole swing higher. Things to be cautious of. African swine fever is starting to really rear its head in China. I guess. The information's only as good as you get, but it's there and it's surfacing.
Yeah, and it is very much surfacing, and it's something we're watching. And we've heard some PED rumors in China as
Mm.
well, and we even have some PRRS outbreaks here in the U.S. that aren't necessarily getting as much news coverage as they probably should. And I think that's a good segue to more hog talk here. Packers seem to be loving this marketplace right now in hogs. I know that February contract option set to expire soon, but that had a really strong day trying to keep up with the cash trade. You look at April, May, some of these other contracts at that $80 range. Cutout remains strong. Export demand rate remains strong. It seems like the hog front is looking really solid here as well, Bryan.
You've got in the summer months trading $90. So this is just as high as we've been all year. Awesome hedging opportunities there, but more importantly, it's again, you look back to August 75, go back to December 80. Okay, $10 gain in 6 weeks. Let's just do the math on that. 10 divided by 80. Yeah, 12.5% rise. Just big numbers that matter. So good stuff, reflective of, I think, just an optimistic view on the demand for commodities once we get past COVID. Remember, before COVID, the economy was just roaring. It was the strongest, lowest unemployment, strongest economy maybe ever. So at least the mindset is we're getting back maybe into that general window.
Yeah, and I think it's something we'll be watching moving forward, but both cattle and hogs looking pretty strong here as we start the week. And I think a lot of producers, probably the same as corn, if they could take advantage of some of these price rallies and play off some of the strength right now, it's probably a good time to do that, Bryan.
Yes, sir. Sure is. Again, be smart, be balanced, work at it. Marketing is like anything else. Consistency, hard work. We do it professionally. We're at it all day long. It doesn't mean we have all the answers or we're right all the time, but just watch the Super Bowl with a couple of teams that do a lot of things right. One of them lost, but they do a lot of things right, and eventually they just win and they win and they win, and that's how marketing is. You just got to keep working at it.
Very, very true. Anything on the dairy front update with us here today, Bryan?
That's been one kind of the I'm going to say maybe one of the sore spots of the commodity complex. It tailed off so hard, and then that jumped back here at the end of last week and was volatile today, but ended up, probably a little bit lower here. It's trying to find its footing. I think the reality is at this point, though, that until we see something change, I just think we're really good at ramping up production, and it looks like there's just enough production to meet demand that we're just not going to hold this market $18, $19, even 20 would be great. We get up there in some food to lunch programs or what have you, and then quickly fall off of that. So I want to be optimistic. I just don't know if I can be optimistic. I think rallies need to be viewed really, really aggressively, at least aggressively thinking, how do we strategize, and then make the determination from there.
Well, Bryan, any other final thoughts you have for us on this Monday?
It's first, second week of February. It's a good time in the marketplace. Things are moving. Attention's going to turn real quick to deciding acres planted and then prepping for that. And gosh, you're only 3 weeks away from planting corn down in Northeast Texas and Louisiana and those areas. So things are moving along pretty quick. Be very vigilant, in particular these new crop prices. You had a big bull run in these inverted markets, and farmers are kind of, disappointed they didn't get more out of maybe last year's crop because they did sell the rally, but it kept moving higher. That's just the way the ball bounces. I'm going to say we had a lot of things fall into play there, but be strategic on this new crop. Make sure you're making sales into this or putting a price floor. Like a crop, it takes money to sometimes make money or save a crop. It takes money to sometimes make money in commodities or save a price in commodities. So really think along those lines and just have a good year. It's a great start to the year.
Definitely is. And Bryan, I know if producers need a little help with their marketing and need a little advice, they can learn more at totalfarmmarketing.com, or as you guys like, they can just give you a phone call.
Yeah, I would prefer a phone call. I can learn a lot about you in 5 minutes, 10 minutes, and tolerances and everything that kind of is important, but get to kind of the point. So we'd love to have that conversation.
Yeah. And what's that phone number, Bryan?
Oh, I'm sorry, 800-334-9779.
I should remember it at this point too, but I was like, I always like to hear it come from Bryan. So
well, at some point, we get back into the working environment we're used to, we'll
Mhm.
probably have our banner up with a number behind or something, but
Yeah.
we're still kind of lying low and being careful and safe, but working hard. So we're here if you need to talk.
Well, working hard definitely is the truth there. And you can contact the team at Total Farm Marketing by Stewart-Peterson for great marketing advice. Bryan, I appreciate the time. Thanks for joining us. We'll talk to you next week.
I want to thank you, Jesse, and stay safe and stay warm.
Bryan Doherty with Total Farm Marketing by Stewart-Peterson joining us here today on Market Talk. That's Monday, February 8th edition of the show. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.